And it is time now for our finance slot, and joining us from Carey Corbett Financial Solutions, is my first time since my return for seeing Tommy Corbett from Carey Corbett Financial Solutions. Tommy, how are things?
Good morning, Alan. Welcome back, even though you were back a while, but good to see you.
Good to have you in, and lots to chat about. If you have any questions for Tommy, it is 086 1800 964. This morning, Tommy, you're going to take us through financial considerations for cohabiting couples when it comes to life insurance and pensions.
Yeah, so I suppose really there are lots of financial considerations for cohabiting couples, but I suppose we specifically see this in relation to kind of life cover, income protection, serious illness cover, and also then pensions and retirement planning and that kind of stuff. And I suppose it's something that has really come up over the last number of years, or over the last 20 or 30 years. If you look at some of the statistics that are out there, of the 1.2 million families in Ireland, according to the census in 2022, the number of cohabiting couples without children increased at more than twice the rate of married couples without children between 2016 and 2022. And in addition to that, nearly 13,000 more cohabiting couples with children own their own home with or without a mortgage, representing an increase of 38%. So what we're seeing, certainly inside in the office and at work, is that more and more people are coming to us maybe for a mortgage, and they're not married, they're not in a legally recognised relationship, we'll say. And I suppose it's something that we're, becoming more cognizant of, and we're trying to make clients more aware of in relation to how to plan around maybe things like mortgages, and with mortgages then how to plan around things like mortgage protection, life insurance, and then maybe also pension planning as well.
Okay, I'm just wondering, Tommy, in terms of, applying for a mortgage and other areas like that, the differences between being a cohabiting or unmarried couple and a married couple, whether it is more or less advantageous for an unmarried couple in any respects?
No, not really. Not when it comes to the mortgage. So basically, from a bank's point of view, what they will want to see is the financials. Basically, can you repay the mortgage if we give it to you? And they will go through the process and all that kind of stuff. But it's really around, I suppose, and we've talked about this in the past in relation to things like inheritance tax and things like that. Because basically, if you're a cohabiting couple, you basically fall into Group C. What does that mean? It means that basically, if we're not in a married or a legally recognised relationship, the category for that is 20 grand, or the threshold is 20 grand in relation to gift and inheritance tax. So, for instance, and we decide to get together and we go and we buy a house together, and we'll say we've no mortgage on it.
I'm picturing the life I could have with Tommy Corbett. I'd say it's
I've heard you're a great cook. So
you heard wrong, but if you like beans on toast, Tommy, I'm your man.
But so we buy a house together, we'll say for 400,000, all right, and one of us dies. So I die, you then get my share of the house, which is 200,000. You're actually only entitled to a threshold of 20 grand on that. So basically, you would be subject to inheritance tax of 60 grand, which is 33% of the 180. All right, so it is a big consideration. Now, what will happen is most people that will come to us will be looking for a mortgage, and it's really around, or the conversation tends to be around, in relation to how you set up your life insurance policy. So again, if we set up a normal life insurance policy, basically we're both paying into it, and therefore you could be subject to inheritance tax or capital acquisition tax should something happen. So basically what should happen is you should be setting up your mortgage protection policy or life insurance policy in what's called life of another. So basically I insure your life and you insure my life. So basically you're paying the premiums on my life insurance policy, or the life insurance policy on me, and I'm paying the premiums on the life insurance policy on you. So that basically if you die or I die, the policy that comes to me, I've paid premiums on it anyway. So there's no tax liability there. So, and that then is used to pay for your share of the property, or if you have a mortgage, it's used then to pay the mortgage back in relation to the bank.
If we were a couple in the US and one of us died, the other person would be the big main suspect because they'd been paying the life insurance policy on them.
That's true too.
And we'd be deported.
And we'd be deported, yeah, exactly, yeah.
Okay, let's move on to practical points on mortgage protection and life cover. What are and we'll talk about key considerations for pensions in a bit, but in terms of that,
I suppose, if you're a cohabiting couple, and again, the Civil Partnership and Certain Rights and Obligations of Cohabitants Act 2010 defines as a cohabiting couple basically one of two adults who can either be of the same or opposite sex, who live together as a couple in an intimate and committed relationship and who are not related to each other. All right, so that's basically the definition. So when it comes to, we'll say, mortgage protection or life insurance structure, avoid your standard joint life or dual life mortgage protection. So what you should be doing is what's called life and other mortgage protection or life insurance policy. And again, that's what I was explaining there, that one person insures the other person basically. What does that mean practically? It means that each pays the premium on the policy they own. So I pay the premium on the life insurance on your life, and you pay the premium on the life insurance on my life. What should you be doing? You should be basically matching the sum assured exactly with the term of exactly with the mortgage. So if the mortgage is 200,000 over 20 years, that's basically what you should be covering yourself for, 200 grand over 20 years. So the sum assured and term of each mortgage protection policy should mirror the mortgage, same initial balance, same term, if using decreasing cover, the same amortization profile, etc., all that kind of stuff. Then I suppose moving on from that, so if we're a couple and there are dependents, then we need to kind of consider things like dual life cover, separate life insurance basically in order to protect dependents and all that kind of stuff. And again, you can do it on life and other. Again, serious illness policy would come into that. And also, because property prices may increase, you could still, even though you might set up a life insurance policy or mortgage protection policy correctly, because of the increase maybe in property values, you could be still subject to capital acquisition tax on the equity that may realise if one person dies. So it is important to kind of take those things into account as well. The other thing which is very important, you should align your life cover, mortgage protection, all that sort of stuff with wills and estate planning. So basically, again, if we're a couple and I have children, they're my next of kin. So basically, they would have more entitlement than you.
Than I would.
Yeah. In the event. Now, the 2010 Act has I suppose looked at that and has given certain procedures and certain things that basically protections to couples in that situation, but you have to meet certain criteria. So it is important to maybe, best place or best thing to do would be talk to a solicitor, make sure you get all your eggs in, all your ducks in a row, and align things like life insurance and pensions and that kind of stuff with a will and estate planning and that kind of stuff.
That is my proviso for getting together with you, Tommy, that I'm treated the same as your children, okay?
Absolutely, Adam. Yeah, absolutely. We wouldn't let you out.
Thanks. What else do people need to know?
Yeah, again, we touched it there. Factor in potential residual tax on inherited equity. So basically, if property prices go up, that extra value in that property may be subject to inheritance tax. So maybe factor that in to things like, you might look at Section 72 policies and that kind of stuff, and estate planning and that kind of stuff. Again, review serious illness, income protection alongside life cover. So a critical illness product or standalone serious illness product can help clear or reduce the mortgage if one partner suffers a specified illness, and income protection can support repayments if someone is unable to work, which is especially important where legal protections are a little bit weaker. So those things are all kind of key considerations. And obviously then, if we do get married, if you go down that aisle, and then we'll have to revisit all these structures if we do get married and maybe change them slightly,
Okay, what about broader life insurance considerations? Yeah,
so again, we touched on there, family protection versus mortgage only cover. So basically, where dependents come into play, you really need to be looking at that and getting advice in relation to making sure that they're protected in the event of death, and you're all protected in the event of death. Domestic partnership recognition and kind of health cover. So basically, some employers or insurers may have specific rules about recognising cohabiting partners for benefits. So for instance, if you have death in service at work, you really need to check that out. Who's entitled? Do you have to be married? It has to be a spouse, or has to be a legally recognised partner, etc. So it is very important that you take out or you look at those things as to, if you are in that situation.
Okay, I was asking in relation to mortgages whether there are any elements of it that are more or less advantageous for unmarried couples compared to a married couple. What about pensions then, and particularly how should an unmarried couple approach pensions?
Yeah, so I suppose one thing about pensions, you have to understand that pension rights are individual and they're not shared. So cohabiting couples generally have no automatic legal right to a share of each other's pension on a separation or death. The pension belongs to the member unless a specific survivor or nominated beneficiary arrangements are in place. So basically, if you're working for a company and you're lucky enough to have a pension, most of the time you will have a nomination form there that if you die, who gets the pension and that kind of stuff, right? Now, again, the 2010 Act has addressed some of these issues where, again, cohabiting couples reach certain criteria, etc., how long they're together and that kind of thing, and dependence and all that kind of stuff. Again, we've touched on it already. Check death benefit and nominated beneficiary rules for each scheme. So do you have to be married in order to be able to nominate, a beneficiary, etc.? So again, check that out. Occupational pension schemes will often have discretionary death benefits and may allow you to nominate a partner as a potential beneficiary. Some will consider cohabiting partners if there is evidence of financial dependence, etc. So all of these things you should be checking out, really, And again, review your spouse's stroke dependent pensions options. So again, many of the public sector schemes provide for a spouse's or dependents pensions. Again, you need to make sure that you're covered under those rules as well, that basically if you die, your spouse's or your partner is entitled to those benefits on death, etc. Okay,
anything else that people need to know?
Again, same, if you're not in a company pension, you probably need to coordinate beneficiaries across your things like personal pensions and maybe approved retirement funds if you're in retirement. Again, a lot of these can be done through a will and estate planning and that kind of stuff. So I would probably talk to your legal advisor, your solicitor, and think separately about retirement income security for each partner. So again, if you're not married, again, even when it comes to the state pension and that kind of stuff, different rules apply. So again, get advice in relation to all of that. And again, consider a cohabitation agreement covering pensions indirectly. So while you generally cannot split pensions between cohabitants, the way you can on divorce or cohabitation agreements can deal with other assets such as property, investments and savings, that kind of stuff. So again, get legal advice in relation to that.
Okay, Tommy, thanks very much for taking us through all of that. The markets, I was not keeping a watching brief on the markets while I was off sunning myself.
I can't believe that.
I know, can you not believe that? How are things at the moment? The last time we talked about them, they seemed surprisingly in good fettle.
Yeah, and basically have remained so. So you haven't had a huge effect on it with your absence, Alan.
Good to know.
So the world index is up around 9.5% today. S&P 500, which is the American stock market, up around 8.5%. Euro stocks 6.7% up. China, kind of flat for the year, around 1% up. I suppose global stock markets have generally been steady over the last month, with some day-to-day swings but no major changes in the overall picture. US markets have paused near recent heights, so they've kind of stabilised around that. They haven't really moved in the last month, and European shares again have been more or less the same, maybe slightly higher. China has been a little bit more volatile, but overall it's been pretty good year to date.
Okay. Yeah. Oh God, we'll see.
But again, we always say, don't panic when they go down. Don't get too excited when they go up. Slow and steady wins the race.
Exactly, as the great philosopher Marge Simpson once said on an episode of The Simpsons. Tommy, thank you very much.
Thanks, Alan.
I think the next time we'll be speaking to you will be after the quarterfinals, so the very best luck against the Dubs.
Thank you.
Lots more to come on the show.
I'm sure you really need that.
With all my heart.